Hi, good evening and welcome everyone. We'll start off. First of all, a good welcome to all of you to this presentation about Jiraaf, which is a platform for high yield alternate investments. Jiraaf was founded by Saurav Ghosh and Vineet Agarwal. Saurav has a decade of experience in corporate finance. He's a graduate from BITS Pilani and I am Ahmedabad. During his time in corporate finance, he's done transactions over $1.5 billion, and this is all in structured debt, equity, asset monetization, and various forms of structured credit. Vineet also has an experience in corporate finance and financial services of over a decade. He's a graduate of RV College of Bangalore, RV College Engineering of Bangalore, and ex-IMB Bhubaneswar. During his tenure, he started his career in Axis Banking, in Axis Bank Corporate Banking Division, followed by he was a founder member of Piramal Fund, which grew to an AUM of greater than $7 billion. Both of them bring a rich experience of dealing with various aspects of finance and have had a very successful career in the last 10 years. And that led them to found Jiraaf and address a very interesting problem in the financial services space. We'll get to that in a moment. My own introduction. I'm a civil engineer by trade from National Institute of Technology, Karnataka. And then I did my MBA from IIM Ahmedabad. I began my career in Royal Bank of Scotland in Hong Kong, and then had a stint with the same bank in Mumbai. Subsequently, I joined a private equity firm called Bravia Capital. We invested in various leasing companies as well as financial services. Our India investment comprised of a company called Rent Alpha, which today has a $600 million book only in leasing. And from 2016 to 2021, I was working with a venture capital fund called One Crowd. We also have our colleague Vikas on the call, as well as one of our partners, Mayank, on the call. After I'm through with few slides, I'll request them to introduce themselves as well. During our journey, we were lucky to have support from Srinivasan Gopalan and Naveen Dhanuka, both of whom are advisors to us. They have again a rich experience of 20 plus years in corporate finance, more or less on the real estate side. But during their tenure, they've seen a number of structured transactions. We are also backed by some very, very successful entrepreneurs, the founder of PharmEasy, the founder of LiveSpace, the founder of MedLife. We've also raised some capital from a marquee VC fund. Hopefully, we'll be able to put that out into the public domain soon. Essentially, why all of us have come together is to solve the problem of growing alternate investments in India. And typically, all investors who have been in this space for a while have invested in fixed deposits, debt funds, gold, real estate, and public markets. As access to technology has deepened the financial markets, there are some products that have become much more easily available, and they comprise of structured credit, invoice discounting, now the flavor of the season, which is crypto. There is various forms of angel investing, and there is venture debt. For us, all of these new opportunities comprised in one single bracket, which is called alternate investments. And we believe there is a gap in the 8 to 20% yield bracket, which where investors are interested and are looking at avenues to participate. And that's where Jiraaf wants to create a mark. We want to be a platform which can help investors widen their portfolio of alternate investments. There have been various global studies that indicate that for a healthy portfolio, alternate investments should comprise about 10 to 20% of your investable corpus. And through our platform, we hope to deepen this market. Now, naturally, the question is, what does Jiraaf bring to the table? Apart from solving this problem, and our team, which now comprises of 26 people, all from roots in financial services and banking, what we are really trying to do is institutionalize this process, bring a lot of transparency to it, bring easy accessibility through tech, and offer to our investors and to our partners the ability to create fixed income and alternate investment portfolios through a single platform. And what Jiraaf will do essentially is we will source these opportunities, we'll make a credit assessment and present it to our investors and platforms for them to choose across yields and across tenors to create their own portfolio sets. This is a sort of simple slide that explains that once an investor or a partner becomes a member of the Jiraaf platform, they will be able to access all our deals onto a single platform. And this will be comprising of various asset classes such as corporate borrowing for bonds and NCDs, invoice discounting, leasing, venture debt. But before any deal gets up onto the platform, there is a robust process that we follow. And this is unlike a marketplace, a borrower cannot come up and simply list its deal. It's a fair amount of work that goes in before a deal is listed onto the platform. Ahead in the presentation, I'll request my colleague Vikas to elaborate on that. What is visible on the screen at the moment is the 5 verticals that we have focused on currently, and the typical yield sets that we are looking at, the typical range, tenor range that you will find, and the minimum ticket sizes that we will tend to keep. Again, the core concept of Jiraaf is that we want to democratize the space of alternate investments. We want more and more investors and partners to grow their portfolio in this space. And that's why we would encourage and keep the minimum ticket size as low as possible so that people can build a more effective portfolio. Where do we stand at the moment? We've been in 6 months of operation. We have now done transaction volume of actually greater than 100 crores. The 82 visible on the slide is slightly dated. Out of the 100 crore, we've got investor subscription for nearly 98 or 99 crores. We have now registered users, again, registered investors more than 1,800. The investors that have participated are now greater than 175, and the partners that we have already onboarded are now greater than 15. So we believe we have just started, and we hope that you will find that Jiraaf is a platform that can help all of you and your clients to become to access alternate opportunities in India. Now, maybe I can request my colleague Vikas to also introduce himself, and then Mayank, our partner, to also maybe introduce himself.
Hi, friends. Thanks for joining on this webinar. I really appreciate that. To introduce myself, my name is Vikas Bansal, and I head the investment vertical at Jiraaf. I have total 15 years of work experience. I am a graduate from IIT Kharagpur. Post that, I worked a couple of years with IBM. Then I went on to do my MBA from IIM Lucknow and passed out in 2009. Post that, I worked with Yes Bank for 5 years, and then in 2014 I joined Kotak Mahindra Bank and has been with Kotak Mahindra Bank for almost 8 years. So I saw the entire credit spectrum from Yes Bank, which is like casino banking, to a very conservative bank, which is Kotak Mahindra Bank. So have flavor what can go wrong and what should go right. So that's the experience of more than a decade that I bring to the table. And currently, we follow the similar philosophy of like the most conservative banks in the country to bring any deal onto a platform. So that's a nutshell about me. So I'll request my partner Mayank Poddar to introduce himself.
Hi everyone. I hope I'm audible. You guys can hear me, right?
Yes, we can, Mayank.
Yeah. Hi. Thanks. Thanks for having me here. Basically, I'm Mayank Poddar. I'm based out of Kolkata. A bit about me is I did my bachelor's in economics from the Singapore Management University. Graduated 2012 and spent a couple of years working in the finance department for BMW, the car company, basically. So I was looking at their forex and interest rate risk management for the India and the New Zealand markets. Post which I moved back and joined the family business. Family business essentially is we're a financial advisory firm, approximately 35 years now in the trade, heavily focused on HNIs and corporates. However, in the past 5 years, we've spent some time and effort reaching out to a retail client base as well, and putting our team building also in that direction to create that offering as well. Yeah, that's a little bit about me and my organization.
Thank you, Mayank. So maybe I can ask both of you a couple of questions, and then we can open it up to the house as well. Vikas, maybe let me begin with you. Could you shed some light on how does Jiraaf originate all these alternate opportunities?
Yeah, so for the benefit of everyone, we have a very robust credit framework as of now, we go out to our previous companies where we have worked it and the previous connects we have. So we first get the opportunity, and then we follow the 5 principles, which are called 5 C's in the market. We look at a company, we look at the capital, we look at what is the compliance, how is the collateral, if any, what is the repayment capacity, and what is the character of promoter. So we do the entire due diligence, and then we present it to our internal investment committee. So investment committee is not headed by one person. It's a set of senior management of Jiraaf who has uh, combined experience of more than 50 to 60 years. So we all deliberate whether it makes sense for an individual to invest, whether it is a credit worthy borrower, and if we should go ahead. And once we feel, okay, it's a decent proposal and we should initiate talks with them, we engage more with the company. We go through their entire due diligence process, which lasts for almost a month. We do their visits, we talk to the promoters, we talk to their bankers, we do their reference check, and we like our traditional credit assessment process will happen. We do that, and then we prepare a internal credit note which goes to our credit committee, and the entire credit committee gets together, and then we decide upon what conditions, what is the tenor, and what should be the product as such, what is the best way of financing this company. Then we disburse that amount, and we list that opportunity onto our platform for our partners like mine to participate with us. So that's the entire process that we follow. So it's a very rigorous process of almost 30 to 45 days that we undertake to before bringing any opportunity onto our platform.
Thank you. Thank you. That's very useful. Could you also help us maybe with the types of products that Giraffe is looking to originate, and what are the various criteria that you might share with an example of what Giraffe might look at?
So, Prateek, so we mostly are into 4 to 5 products. So these are not something that we have invented. So these products have been into the market for a very long time, and it's just that they have become more affordable because of the technology to reach out to the masses, and there have been enabling frameworks that are allowing us to bring it to the common center. So just to elaborate, yes, so what? Sorry. So the products I was talking about is the first product is that they can yield from 3 months to 3 years. So it depends on the tenor that the product we are doing. So as of now, the first product that we did on our platform was the real estate debt, in which was a 2-year product for a builder like Vadva. So it's a real estate corporate debt. Second was a leasing product, which we did for the largest operator of Uber by the name of Everest, which was for a 3-year opportunity. The third one that we are planning to come is invoice discounting, which by very nature is a very short-term product by 30 to 90 days, and it's for the working capital of the companies. Another one that we are looking at in the future is venture debt or revenue-based financing. That is for the benefit of the new age companies that are coming into this space. So these are, and fifth one is, you can say, the corporate debt for the NBFCs, which we have another opportunity in the pipeline. So these are 4-5 products that we are looking at to list on our platform. And they have, according to their tenor, they have different yields.
And for the benefit of our partners, are these products externally rated?
Yeah, so some of them products are externally rated, like you have an NCD. So NCDs are rated by external agencies like CRISIL or India Ratings, which are part of Fitch Group, but some of them may not be. So like a leasing. So rating agencies themselves do not rate these products while we are engaging with them. But it would take some time for them to get the credit history and about this product. So as and when they are ready, we would be getting them ready. But there may be some opportunities which are not rated as of now.
Thank you. Mayank, maybe we can start with you as well. What prompted you to actually look at alternate investments in India and subsequently to recommend to your customers and clients as well?
Right. I think largely we were, I mean, when I say we're a financial advisory, sort of outfit. The bread and butter product for an outfit like us tends to be something like mutual funds. Then, of course, you have stuff on the side, right? You have your bonds, you have your very traditional products like fixed deposits. However, what happens over a period of time is that, and I think you guys pointed that out, we bucket products into categories depending on the time horizon, the risk appetite that you need for that particular product, as well as the return expectations, right? So if you look at an equity product, we market tend to sort of look at it as a 4 to 5 year product with returns of anywhere between 16 to 25%, right? Depending on how things pan out. You look at a debt fund. That would typically be, in the present environment, that would typically be a 4 to 6% return product post-tax, right? And that is a shorter time horizon. So for us, what is enticing about Jiraaf, what is enticing about the alternate investment space in particular, is the fact that you're creating a return that is potentially somewhere in the middle. So, I mean, I don't think we are trying to go out and create a 25, 30% return. That is not the objective. But of course, we're not trying to take a risk, the risk that a 25% product entails. So sure, in a 5-year rolling period, you never see a loss in the equity markets. But I don't think all my money or all money that a client has available is essentially free for 5 years. So for me, the products that Jiraaf offers, it creates a sweet spot in terms of risk returns. For most products, I actually get some cash flow on a monthly basis, which I think is a very big factor, because when I am locking a certain amount of money away as an investment, one of the fears is that I might need part of that money. So when I have an interest-linked product, or when I have like a leasing product where I'm receiving a part of the lease on a monthly basis, that sort of takes that fear away that the money is also getting locked away for good. So I think those couple of things, the fact that the liquidity sort of keeps coming back, doesn't get locked away completely, and the fact that it creates a sweet spot in terms of risk reward, those are the things that make us view the industry quite favorably.
Thank you. I think at this point, I would also request, in case the audience has any questions, there is a Q&A box at the bottom of your screens. Please do type in your questions and we can take them as part of our conversation. Actually, one of the linked questions to your thoughts, Mayank, has already come up. That
Right.
How do you do your due diligence before advising your clients about various deals that you encounter?
Okay, so that's interesting. So that is something that we do see critical to our process as advisors as well. Now, obviously, point number one is that, and I say this without bias, we work with Jiraaf because right off the bat, we've had some comfort when we spoke to Saurav, when we spoke to other people in the team. I think I've spoken to Anil as well. There was some comfort in the processes. That said, we do retain our part of the due diligence. So essentially what I would do is I would typically look at the sector that is involved, how well the sector is performing, and what are the immediate medium-term prospects for the sector. Secondly, I would obviously very importantly look at the brand that is in question. So to quote a very recent example, you had Everest on the platform, and we saw that as something that we were keen on, simply because Everest comes from a larger, profitable, reliable group of companies. On the face of it, it does seem that they are doing a fairly good job on the Uber platform as well. They've got a significant number of cars, and the additional amount of money that they were raising did not seem any sort of over leverage in terms of their operations currently already. So, I mean, we do look at some industry and company specific factors before evaluating our comfort with any deal that comes up.
Thank you. And a follow-up to that, to Vikas, actually, what do you see as Jiraaf's strength, and what is Jiraaf doing to help our partners?
So, Prateek, as you have already mentioned that we have a decade of experience in finance. So our expertise lies in evaluating the opportunities. So we do not just bring it for the sake of returns. We are able to evaluate the risk in a measured manner, and then price it. So that's what our core strength is.
And in terms of our partners, how are we helping them on the tech side, on the tech platform? What is Jiraaf promising to do?
Yeah, so for the partners, what we have in offering is a technology platform. We will be making a login for them, and they can see the entire dashboard for their investors. From there, they can know the behavior, and once an investor invests, they can know their psych, what type of product is being liked upon them, and they can see their interest certificates, they can see their returns, and how are they performing. So all sort of analytics would be present on the platform for our partners. Moreover, once our partners onboard investor, if we help them to educate to their investor if they need any help to understand the opportunity itself. So, and our Jiraaf team is there to explain the product better to the investor. So there's a knowledge sharing happens from our part. We provide the marketing material to our channel partners that they can circulate to their entire team. So there's entire hand holding is there for the partner. And say, I think that's mostly we do for the partner.
I think one of the important things also that Jiraaf is trying to do is that once you bring in a customer or a client of yours, that's tagged you through the life cycle of the customer. So you can maintain your own customer portfolios using our tech platform. A part of it is being built, part of it we are trying to do manually. But in the next couple of months, we hope to set up this full ecosystem so that then all our partners can have a very seamless experience. Just to touch upon what is commercially Jiraaf's offering to our partners, Vikas, if you could touch upon that, that'd be helpful.
So Prateek, it depends on product to product. So if it's a short tenure products of 3 to 6 months, so the commission would be different. And if it's a long tenure product and it's a very structured product, that's quite a lot of effort for explanation. So accordingly, the commission would be higher. And if it's a capital market product, so we have all of us know it goes anywhere between 0.5 to 1%, which is externally rated. So it's a industry benchmark. That's what we offer to our partners, rather better than the industry benchmark, because these are somewhat structured products. So for every year, just to give you a ballpark sense, it could be something ranging from 0.5 to 0.75.
Understand. I think a question maybe first to Mayank, and this is, I'm picking it up from the audience questions. How much percentage allocation to alternate investment is optimum from an overall portfolio perspective? If you have to think it from your client's lens, and maybe Vikas, you can also take the same question after Mayank.
So, I mean, I don't have a perfect answer to this. I think what we are essentially realizing is that if you go speak to a client of yours, they've probably not heard of an alternate investment product in this regard, or at least had an experience of it. So I feel like in the first wave, the challenge actually is to give the clients a taste of the product. So internally, how our team views it right now is that we are trying to sort of make sure every client, even the ones who are skeptical, they at least make a token investment into the product to essentially get their hands sort of dirty and experience it. We also do believe that till a client does not try out a product, they do not build comfort with it. So for us, that is the main challenge. In the long run, I think it becomes a function of how you want to wire the client's portfolio. I don't think 10%, 15%, 20% has to be a thumb rule, to be very honest. If the client is someone who is not very, very risk-taking, but has money available to spare for between 1 to 3 years, you can even look at a higher allocation. I mean, the diversification can work within these products as well, right? You don't need to go into one deal or two deals. You can actually allocate that money systematically over a year into 5, 7, 8 separate deals as well. So I would say that in the present environment, I would not see a thumb rule of the client's portfolio as a challenge. I would rather be more focused on giving the client a taste of the product.
So I fully agree with what Mayank has said. So there's no thumb rule like whether it should be 20% or 30%. But as Mayank has said, they should test out our products, and that is why we have kept most of them on a regular amortizing basis, so that the person who is investing, he keeps getting his capital back, and that lowers the risk also. And these are, as we mentioned earlier, these are less riskier products than equity, because we all know equity market is at almost at the top, and debt fund yields at the bottom. So if there's an opportunity in the market where you can lock in returns from 10 to 20%, one should try with a minimum token amount, and should look at our track record. And once they get to start repaying, they can invest that amount again to build a larger portfolio.
Understand. Again, taking a couple of questions from the audience. In each investment opportunity, this is to you, because in each investment opportunity, how much is Giraffe's own investment? And if a company starts losing business, what will happen to that investment, and what's the role of Giraffe?
Yeah. So to mention, we underwrite each of the opportunity upfront, as we said, and we do not have any obligation to invest through our own balance sheet. But Prateek, me, Saurav, Vineet, all of us, Anil, invest in our personal capacity. We are very sure of our opportunities, and every one of us till now have put our own money in the every deal that we have brought to on our platform, and we plan to keep doing so.
I think just to add on that, actually Giraffe pre-funds the opportunities from their own balance sheet, and then allows the partners to take a part of it. So in case the partners don't take it, we are actually carrying that investment through its life cycle. So that's the risk that we are also taking and sharing. I think once from a structural level, we'll be clear of how we can hold assets, then we'll be happy to take a part of it. The second question, the second part of that question to you, Vikas, is what happens if an opportunity starts to go south, and what's the role of Giraffe?
Yeah, so like if it's an NCD structure, there we have a debenture trustee, which is the third party. We, as a debenture holder representative, make sure that the client is safeguarded. We monitor the financial performance, and if there's any early warning trigger, we engage with the company to repay us on time. And in case of Everest, like the leasing deal, we are the designated partners. So we make sure that the payment is made on time. So the entire asset monitoring and compliance lies with Giraffe. And if the company goes south, so we have in each of the deal that we bring in, we have built enough safeguards that we can take a corrective action, and the loss to our investors is minimal, if any.
Another question from the audience bracket. What are the kind of repayment schedules that your opportunities would have? Would they be monthly or quarterly or yearly?
So each opportunity will be structured in a different manner. If it's a short-term product, say invoice discounting, say 3 to 9 months or 6 months, then it will be a bullet. If it's a longer tenor, so it depends entirely on the cash flows. Let me tell you of the company, so whom we are funding. So it could be monthly, it could be quarterly, it could be yearly. If it's an MLD structure, then it would be a lump sum payment. So it depends on opportunity to opportunity. But let me assure you that we will have enough opportunities to choose from, and an investor, according to his requirement, can invest in the particular opportunity. So if he likes monthly returns, he can put it in a leasing transaction. If he likes quarterly, then we would have a product for that. If he likes bulk, because some of the investors don't like monthly returns, they want cumulative returns at the end of each year. So accordingly, we'll bring the plan. So there will be an entire bouquet for them to choose from.
Another question is, are you looking to do more real estate transactions?
Definitely. So we are evaluating a couple of opportunities. So it's a matter of time. If we find the right opportunity, we'll list it onto our platform.
Another question, perhaps in the same, not in the same vein, but a critical one nonetheless, that what is the regulatory framework under which Giraffe falls? And if you could shed some light on it.
So Prateek, in regards to regulatory framework, so there's we have the products that we are listing are regulated. So if you talk about NCD, it's regulated by Companies Act and SEBI, and anyone who holds that certificate can sell it down. So in regards to leasing, the entire structure is being scrutinized. We have found a LLP structure, and for each and every deal, we make sure it's a regulatory compliant. And these are new companies, like fintechs are coming into. That's a new space we are exploring. So there are no regulations as such as of now, and we are being advised by EY and CAM, which is Cyril Merchant Mangaldas, which is a big law firm, on each and every structure for us. So that's how we make sure that we are compliant.
Understood. A simpler one from the audience: is Jiraaf looking to increase its product portfolio in the future?
Yeah, that's what we want to do. So till now, we have given flavor of three deals to our customers. The first one was a real estate. Second one was our invoice discounting. Third one was leasing transaction. And the fourth one, which is an upcoming transaction, maybe by next week we'll list, will be an NCD of NBFC. The fifth one would be, or maybe simultaneously, we will have one more invoice discounting. We are also exploring revenue-based financing and venture debt. So we want to give a flavor of all the products to our investors. So we'll keep increasing our offerings.
And maybe a linked question from that to Mayank actually. How do you see the investor appetite for such products? And do you see that as an advantage to working with Jiraaf, which can have a host and variety of these products on a single platform?
Yeah, so I mean, I think that does link back to the last question I just answered. In the short span of time that we've been offering Jiraaf, as well as in general asset leasing, inventory financing as a product, what we've realized is that investors who do tend to try it out have had only 100% positive experiences, and that sort of increases the probability of them coming back and making a second investment. So for us, a second investment rate in alternate products is more than 90% approximately, right? So we do see that as a big positive. I also think it's very good for us to build up our business, because typically what happens is that, yes, mutual funds, for instance, are great products. They do very well for the final customer. But what we have to understand is that they are now commoditized to a huge extent, because there's a lot of literature, there's a lot of information available everywhere. However, what does happen is that culturally in India, you tend to talk about your investments if you do something right. It's just human psyche. So for Jiraaf, what we found is we've had a few examples of people actually telling their friends about a very interesting experience that they had with an investment. And that actually helped us, get introduced to some new clients. Typically, people are more keen on meeting you as well if you have an interesting structure or a new product to offer. So I think that's been one of the sort of hidden blessings in trying out alternate products very aggressively. So yes, I do see a lot of potential for the category and for Jiraaf moving forward.
Another one for you, Vikas. Are these returns that Jiraaf products offer, are they taxable?
So it depends on a product to product again. So there's no single formula. So if it's a leasing deal that we did recently, in the investors were getting post-tax returns. For NCD, since these are unlisted, it will be taxed in the hand of the investor. So totally depends on the product. What are the taxation rules? So in some of the products, 10% withholding tax could be held back by the company, but the investor would get the relevant tax certificate via us. So
I think one of the key points there would also be that whatever be the taxation structure, you would have clarity on it right at the outset. When you invest, the details would be put up onto the platform itself. So you would know how the returns are calculated, what is the tax document that you will get, and whether that's taxable in the hands of investor or in the structure itself. Another question, this I think both of us can answer actually, that does Jiraaf plan to introduce lower ticket sizes for future deals?
So Prateek, I'll let you answer this question. You have been only asking it. Let you answer.
I think in this sense, we certainly hope so. It depends on what are the kind of products that we are able to bring. Some of the bonds that are well rated and are well understood, maybe we'll begin there by lowering the ticket size, and then go to more further products like leasing and venture debt, where we might stick to a higher ticket size, simply because we want our anyone participating, our partners, our investors, to be aware of the risk that those products will carry, and we want to be able to explain that risk before anyone comes along. So yes, the answer is yes. We don't know the time frame as of now, but certainly our endeavor is to continue to bring the ticket size lower. Next question is, can a NRI invest in these products?
Some yes, some no. So again, the answer is standard. It depends on opportunity to opportunity. I think I've been repeating it too often. So it depends on the FEMA regulations that are prevalent in the country. If it's NCD and it's if it is not listed, NRI cannot. But in a leasing deal, that the way we structured it, NRIs were allowed. So we will let you know again, like the tax bracket, whether they are taxable or not. We mention it on our website, whether an NRI can invest in this opportunity or not. You will get to know it upfront.
I think maybe we can take some last 2-3 questions, but before that, Mayank, a question to you. Which are the alternate investment products that you see growing in the next couple of years?
So personally, you mean specifically products? I think products that I personally favor a lot internally. We do look at asset leasing very aggressively. The reason for that is we just like the way it's structured. We like the fact that it's put in an LLP. The asset is held by us. So we have control over that. Very secure. We also like it because we prefer deals where the asset is liquid. Again, I'll go back to the Everest example. We liked the fact that it was cars. Secondary market for cars is extremely liquid. So if something does go unforeseen south, I see it not as a very difficult task to get rid of a bunch of used cars, right? So asset leasing is something that we are very keen on. We do like the idea of inventory financing a lot. The reason for that is it's a more short-term product. It does not require a 6-7 month commitment. And again, if the company involved is a brand I'm comfortable with, I feel fairly all right taking a 1.5, 2 month, 3 month call on an inventory financing deal. So yeah.
Understood. Because I think this would also be the right time to actually ask you, what are the upcoming opportunities on Jiraaf?
So next week we are planning to bring NCD for a BBB plus rated company, so which is a very short term product again for 15 months. And as Mike mentioned before, that they like the amortizing structure. So the principal and interest would be paid on quarterly basis to the investor. So just to give you the numbers, if somebody invests 10 lakh in this opportunity, he would get 12% return, and on every 90 days he would get 2,17,000 in his account directly from the company. And it's externally rated and validated by India Ratings, which is part of Fitch Group BBB plus. So that's the next opportunity we plan to list on our platform, and it should be early next week.
Understood. Another one from the audience bucket: is Jiraaf a registered company?
Yeah, definitely. So we have a company and we are registered with the MCA. That's how we are working.
I think maybe to sort of, we'll only take maybe a couple of more questions from the audience. But on the final note, man, you've worked with us. You've had some experience with Jiraaf. We hope you will continue to work for us for a long time in the future. What is the message that you would like for us to take back and improve upon? And what is the message that you would like to convey to our fellow partners that are on the call?
No, I think working with Jiraaf has been fairly smooth, simple till now. I mean, we do understand that it's a new growing organization, so there are always some efficiencies that we sort of talk about with the team if and when something comes up. But I think largely we are quite happy with the experience overall. We are quite comfortable using the platform as well. What I would suggest to all the potential partners on this call is that this is a space that everyone should keep their sort of eyes and ears open to. And we should continually be looking to work with Jiraaf, players like Jiraaf in the industry, because I think that's just overall, it improves your offerings. It is expanding the space very aggressively. And if you can work with it, if you can introduce your clients to it, it sort of opens up a new avenue of growth for the client as well as for your business. So that's how we see it going forward.
Thank you. And Vikas, in a similar vein, what is Giraffe's promise to all the partners that are available on the call?
So our promise is that we won't let you down. And as I mentioned in the starting, we make sure all the opportunities that we list on our platform are credit worthy, and we will take time to explain you and your partners and your investors. Once you become convinced that it's the right opportunity, then only we'll ask you to uh, invest in that, and we'll give you all the support in the technology support where you can see your investment of your partners. We'll give you all the knowledge support in the form of product notes and everything. So we'll have a whole handhold of yours, and we want to offer you the diversification to your customers. So equity and debt is something which is saturated as of now. So there is a play of alternate investments, and you should start looking at us and maybe interact with us. And if you want to reach us, you can write us an email at support@jiraaf.com, and we have a number on our website. Feel free to connect with us, and we will walk you through. And if you have any further queries, we'll be happy to take it on.
I think that's a good note to wrap up. I thank you, Vikas. I thank you, Mayank, especially for taking out the time. I thank everyone on the call for sparing the time in the evening today. In case anyone wants to get in touch with us, as Vikas said, please do reach out to any of the Giraffe team members or on support@Giraffe. We look forward to hearing from everyone, and thank you for joining.